Hello, trading has closed on April 21st, 2025, and as always, we'll start with our disclaimer, go over our calls, make our predictions. It's my trading plan for Tuesday. Tuesday is April 22nd, 2025. Remember, I can change my plan. My plan can be wrong. Trade at your own risk. Look for the pattern today with the early low. We got that. Tomorrow also has the early low. We get to cross the target off the list, 51.54.37. That was a target. It's also resistance right at the close there. That takes care of all the lower targets, unless you want to go back to January of last year. January of last year had a target 47.44.78. One unfilled target in the year certainly has adequate precedence, so I'm not certain if we're going to see that number or not. We still have higher targets, but nothing lower until we hit that number. We said we had a great setup for the pulls. All they had to do was gap and take out this high and keep going, and they could have a huge rally. And if they didn't, we'd have to change our plans. Well, obviously they didn't do that. This is just what we said. It was a good setup. The bulls never capitalized on it. But we did say, even if they didn't, we were close to a low, and I still think that's a true statement. We were dropping all day. MEJT said ultimately we see lower prices, but they wouldn't stick and we'd retrace, and that certainly worked out. Well, this is the count we're using. In some place we have to find wave B of 2. This is A of 2. We're calling this B of 2. This low is right at the 50% level of wave black 1. So it's one of the places at which there is Fibonacci support for a low to be present. Now you can always come up with some count that works, but we've been pretty clear about this being green A, and it's now possible to count an ABC for green B, and ABC has C equal to A. We'll magnify this by going to a smaller time frame. And if you take the A, and here's your B, there's your C right on the dot, and it's a 5-wave pattern. It's a perfect fib ratio. All these things work. Now, just because this count works doesn't mean some other count won't. But it certainly is a place where you want to look for a low to hold. And if this low falls, well, then that's not the right count. This is a pattern which usually closes at the high of day, and it's negative if we don't. Now, I don't know where we're going to open tomorrow. If we open way up here, then fine, that's the high of day. I don't think that's going to happen, so that's negative, and we should see lower prices. But it's positive. And we gapped down, hit lower lows, and closed over all these lows, and even over this high. Now again, I don't know where we'll open tomorrow. We open down here, that pattern's killed, but that calls for higher prices. So we have something calling for higher prices, something calling for lower prices, and we'll have to use the mixed signals rules, which are right here, don't change. Tomorrow's pattern has really low regardless of where we open. Mixed signals, it is bullish. We gap down, hit a lower low, but closed over intraday lows. Unless we gap and promptly undercut the low of the day, we should see higher prices tomorrow, even if we don't close higher. But it's negative. Today's normally bullish pattern wasn't bullish at all. Unless we gap and take the high of day promptly, we should see lower prices tomorrow, which doesn't mean we have to close lower. There's Elliott wave and Fibonacci support at today's low, and one possibility, I think a good possibility, but not a guarantee, is that we trade both higher and lower Tuesday, with the Monday low holding, and then rally on Wednesday. We'll pencil that in. I can't say it's required. And keep in mind that significantly undercutting the low of the day kills the idea, which is always possible. But I think it's possible we piddle around tomorrow. And if we do, if you can't get follow through on this big drop, that would call for a rally on Wednesday. At least we'll pencil it in. It's a plausible idea as long as this low holds. And just as we had a lot of reasons to think this low might hold, but it was killed before the open, so we didn't risk any money on it. We have a lot of reasons to think this low might hold. And again, if we gap down sharply, undercut this low, then I'm not going to risk money on it. But if we could piddle around tomorrow, trade both higher and lower, I think if that happens, I think we could see much higher prices Wednesday, because this is a reasonable candidate for the end of this decline. And if it is the end of this decline, the wave count calls for much higher prices. And that's today's call.